How you doing, friends? Good morning. How you doing? It is. This is the. Excuse me. It's tough. It's a Monday morning, but welcome to Zero DTE, and this is the Fat Tail Energy section.
This is the.
Of course.
Excuse me.
Yeah.
It's tough. It's a Monday morning.
Yeah.
But welcome to Zero DTE.
Where is that?
This is the Fat Tail Energy section. This is the.
Of course.
Excuse me.
How do we get rid of that? Let's see. There we go. I've got a million windows open, and you never know. And see, now I have the, I don't know if you're familiar with this. If you have a Mac, then you'll know what I'm talking about. I have the spinning beach ball of death. There, it went away. Apparently my Safari went nuts. But anyways, this is the Fat Tail Energy Session, Monday, April 28th, 2025. And this morning, global markets are buzzing with fat tail potential. You notice I keep on with this fat tail thing. And that's on purpose. There's going to be a big reveal as we go through the week talking about fat tails. And fat tails are referring to these way out of the money bets that you can make. And just bear with me. I mean, the Zero DTE is all kind of based on this asymmetry. And I'm going to take asymmetry to a place where you never imagined. But it's going to be great. Promise. But anyways, this morning, from a macro perspective, the things that are really on everybody's mind, the things that may be adding energy to the market are energy supply fears. That's on the top of the list. Below that, we are talking about tariff battles, debt ceiling drama. You know, it's kind of like a cocktail of risk and opportunity. Now, the VIX has pulled back just slightly, but under the surface, there's a stage setting up for more explosive moves. So it's kind of like the calm before the storm type of scenario, and I see that's what's happening. So sorry, weekend's caught up with me. So let's dive into the structures, volatility setups, and where we plan to put on our asymmetric risk trades today. So let's take it to. I am so unprepared today. Let's take it to the charts. There we go. Did it in first try. All right. So here's the big deal. Over the weekend, VIX has dropped a little bit. It's slightly elevated this morning, but still we're right in the middle of the Goldilocks zone at 25. That means that we're still looking at much wider out-of-the-money flies as our primary strategy, looking at 35 to 45 wide. We'll take a look at the big-ass fly here in a sec to determine should we be on the 35 to 45 wide. You know, where are we on that spectrum? And let's see, we'll just go to Thinkorswim. And we can see very quickly that our big-ass fly is sitting at around just under 17. All right, so that means that the big-ass fly is on for this morning because anything under 25, and we consider it a good risk if there are economic reports that are coming out that we can capture a volatility crush event. So typically what we do is we put this thing on before those economic reports. As volatility is rising into it, the report's released, and then you have some sort of crush event, and the value of that fly will increase dramatically. When I say dramatically, probably 1 to 3 points, which can put in your pocket anywhere from $100 to $200, maybe $300. And then the fly trade is typically over. Some people might want to get a little greedy and hold it on into the market, and then when the market opens, it moves sharply, and so that's the risk that you choose to take on for yourself. So, anyways, that's the big ass fly. Let's go back to the charts, and we'll move on. So we're definitely on the wider side of our butterflies. So when I say 35 to 45 wide, so we're kind of like down here in between 25, 35, 35, 45. So I would say we're more like between 30 and 40 So if you were going to take a big ass, an out of the money fly, I think 40 wide is your poison today. And if you're on the XSP, that's 1/10 the size. You're looking at 4 wide, or the SPY if you choose to do the SPY. We're not real big proponents of choosing SPY for these types of trades, for 0 DTE trades. Rather take the indexes or the futures. All right, due to early assignment risks. So let's go on and move on to the directional bias. The directional bias is definitely up. As you can see, we're well above the moving average, and it looks like we're on a new leg. We've now broke out of this pattern here where we're just constantly trying to pound on the ES. That would be a 55.10 level, which brings us into, and you'll see this in a second, directly into the larger node above. Once we've broken out into that area, kind of sets the stage for the market going higher. So that's where we're at there, bullish today. And let's take a closer look at our market structural analysis. So here you can see the bottom of the node. We'll be looking for pullbacks either to the bottom of this node, so we're definitely have crossed the Rubicon. That's, see right here, the bottom of the node, and you'll see that in a second. And we're looking for breakouts above the morning session. All right, so the morning session high was right here at about 55.49 on the ES. I'm always talking about the futures when I'm looking at profile analysis. And so let's take a look at what that looks like from the big picture volume profile. So here's the big node that we just entered, the famous bifurcated fork node. But we're up here. This deep crevice right in the middle node, I'll make that a little bit thicker so you can see that. We'll make it like 3 wide so you can see it right in the middle here. Let's make it a different color so it stands out. We'll make it, I don't know, sort of a turquoise color. That should provide some level of resistance as we're moving up. But if we break there, you can see us move right to the top of that node. It's what I'm predicting. I don't like making predictions, but I'm just saying that's typical market behavior when it's inside a node like this. And I mean, we noticed it when we were way back here too. All the way back last year where this node originally took place and has been shaped up ever since. So we have some experience with this node. But now that we're in it, like I said, strong resistance at this level, which is at about 55.70. And if we can move beyond that, I think we'll see some fast move up here to challenge this next volume well, which will be the next leg up. All right. Or not. Let's just go all the way down. But what's happening now is that we're setting up, from a volatility perspective, sort of a lull before the storm. Volatility is dropping. Things look all hunky-dory. We're waiting for the next existential risk to happen. Something's bound to happen in the market, and then cause one of those little bops that we all love. And yeah, so that's about it. We can talk a little bit more about the markets and what's going on. So there we go. We're 40 wide. Directional bias is up. We're now inside this rather large node, a little bit of resistance in the middle of it, so I see some choppy action, but I'm expecting that we're going to move right through to the top and then challenge the next well and the next low liquidity area to go higher. Unless we get something that's going to disrupt everything, right? Because today's market story really is about suppressed chaos waiting to pop. All right, so that overnight volatility has eased a touch. The VIX settling near 25.5 or so. But under the hood, like I said, our battlefield analysis of catalysts include, and this is why I said today is about the fat tail energy. OPEC has supply uncertainty that continues to drive energy markets lower. I know that last week I had pointed this out when Reuters was saying that OPEC was talking cuts, and I said that's a bunch of bull. And so now we're seeing that all play out. Crude oil is off nearly 2% overnight. So that tells us, with all of these sort of risks kind of coming and getting compressed, and volatility is coming down. From a fat tail perspective, notice I keep on talking about fat tail. We're talking about these super out of the money trades that we make periodically, maybe once a week or so. It costs super cheap, and now would be a good time to put on those way out of the money longs on oil. And so we'll be talking about that a great deal more later on. I am launching a new service on Skool called Fat Tail AI. And if you want to take a part of that, I think you're going to find it very interesting. Anyways, in tech, we're having the tariff wars. There are whispers that have been introduced into fat-tailed downside risks for SPY, QQQ, and XLK. Meanwhile, the U.S. debt ceiling debate is looming, and it's quietly shifting the skew to the upside. It's a subtle but powerful bullish undercurrent if a deal breaks through. So if we see all of a sudden everyone says, hey, debt ceiling is no longer a problem, you're going to see the markets really take advantage of the situation I talked about in the volume profile. Of course, the ECB, their hawkish stance is still reverberate. I cannot say that word. That's a word that I shouldn't put into my my morning reverberating, putting global risk assets on edge. And there are geopolitical tensions in the Middle East also. And add a final dose of uncertainty to those commodities is gold. Gold has just been taking off. I am so pissed because for reasons I had to cash in a bunch of my gold at 2,900, and I thought, okay, that seems like a level where things are going to sort of calm down, but man, it has just taken off. Fortunately, I still have some, so I feel okay with that. So in short, volatility has compressed a little bit, but not enough to erase those fat tail risks. In fact, now is the time to start adding to those positions for those bigger outsized moves. Long, like I said, super low cost, way out of the money. Now's the time to start planting those seeds for a big upside potential. But the market structure is aligning with this bullish continuation theme. But there is these kind of downside catalysts that could explode if sentiment shifts sharply. That's what we like. It's kind of like lull before the storm. So your job is to stay disciplined, structure your trades. We want them wide. Focus on that asymmetric call fly setups while keeping an eye on any opening for reversals around key volume nodes. And that's where the fat tail stuff comes in. I'm going to just keep on saying fat tail until you get sick of it. So remember, today's setup isn't about slow grind moves. It's about fat tail energy, lurking risks, and sudden breaks that reward asymmetric positioning. So stay ready for explosive opportunities coming out this week. We're looking to move up. And like I said, these tariff talks and debt ceiling talks could fuel further upside. But on the other side, someone could say something that throws a monkey wrench in all of that, and then we could have one of those existential risks. That's where our fat tails will come into play. All right. I don't know if that was all too much for you to consume, but that's what we have going on. Thank you very much. This is Coach Ernie, and I am out.